Hi everyone, I'm Miles. Many are familiar with the GDP formula, GDP equals C plus I plus G plus NX, the sum of consumption, investment, government spending, and net exports. But in practice, there's often confusion about what government spending, or G, actually includes. For example, if the government issues tax refunds to residents, does that count toward GDP? Today, we're focusing on just one thing, government spending. And we won't just memorize it, we'll solve to learn. Let's look at the first question. Which of these counts as government spending in GDP? A veteran's pension, building a new public library, a donation to charity, or interest payments on national debt? Before choosing, remember this core principle. GDP only counts final goods and services newly produced within the country during the current period. In other words, GDP measures production itself, not just the flow of money. Now, let's use that logic to decide. Pensions are transfer payments. They're just income redistribution and don't create new output. Similarly, donations don't correspond to current production. National debt interest is a financial payment, not a purchase of goods or services. Only building a new public library involves new construction, new labor, and new output. So the correct answer is B, building a new library. Now let's look at a more advanced question. Which of the following is fully included in government spending? The government paying attorney salaries, tax refund checks, buying an old building, or contribution to the UN? It's the same logic again. Paying salaries is a purchase of current services, so it's included in GDP. Tax refunds are transfer payments, so they're not included. Buying an old building is a used transaction. There's no new production. And payments to international organizations aren't part of domestic current output. Therefore, the correct answer is A, government salaries. The real key is this. Whether government spending counts toward GDP doesn't depend on how much is spent, but on whether new output or services were created in the current period. GDP never measures where the money goes, but where the value is being created. By solving problems to understand the underlying logic, we truly master the material. Macroeconomics is never just about memorization. It's a tool for training your judgment.